Hello everyone, welcome back. Hope all of you got a chance to read the textbook and went over the PowerPoint slides or watched my lecture video. Now I will go over some sample example problems from your textbook chapter, and I will focus mostly on number based problem where you will have little calculations. So here, first problem. It says that a private not-for-profit healthcare entity has this following account balances. So these are the account balances, and you will see several items and the dollar values. So the question is, what is reported as the organization's net patient service revenue? So we're gonna focus on that patient service related revenues, and it also says net. So let's see, first one is revenue from newsstand. So it's not actually patient service related, you should not include it. Second one, amount charged to patient, this $800,000. Yes, of course, this is our pure amount patient service revenue, but we need to figure out the net amount. That means we need to consider the amount that we will not be able to collect. Next item is interest income. It's one type of investment income, not patient service related. Salaries expense, no, we should not consider it. We are focusing only on revenues and specifically patient service revenues. Provision for bad debts. Yes, so this amount is a provision for bad debt, just like regular company. They actually consider one amount which they think that they will not be able to collect. It's an uncollectible amount, and we record it as a bad debt. The same thing that healthcare entity will also do, and you need to exclude that part from your revenue. Then undesignated gifts. No, it's not related to patient service revenue. And the last one is the contractual adjustments. You need to consider this item here, and that should be deducted from this patient revenues. So what is this contractual adjustments? Sometimes a healthcare entity can have some contract with third-party payers. Third-party payers means either an insurance company or Medicaid. So they may have some contract, and sometimes the third-party payers may not pay the full amount. They can pay a lower amount. Then if that happens, then the healthcare entity must write off that amount from their patient service revenue, and they actually do it using this contractual adjustment account, which they debit it. So this contractual adjustment is also one sort of like uncollectible portions from the third-party payers. So we also need to subtract this one. That means they actually charge through their patient $800,000, but you need to subtract this 10,000 and this 110,000. That means 120,000, and you will have this 800,000 minus this 10,000 minus this 110,000. So your net patient service revenue will be 680,000. Now let's see another example. Again, I'm looking into only the number based examples. So let's see. A private not-for-profit entity receives 3 large cash donations. So one gift is unrestricted, $70,000. Another gift is $90,000 restricted to pay the salary of the organizational workers, and the third one is $120. It's also restricted forever, with the income to be used to provide food for needy families. Now, which of the statement is not true? So we already learned those net assets could be classified into 3 categories: unrestricted, temporarily restricted, and permanently restricted. So the first one is straightforward. It's unrestricted. Donors didn't, the person who provided the gift or the donors didn't impose any restriction. But for these 2 other cases, those are restricted. And here the second one is temporarily restricted, because when they will pay the salary to their organizational workers, then they will fulfill the condition, and it will be transferred to unrestricted fund, and these restrictions will be removed. On the other hand, the last one if the restriction is forever and it is assumed that as long as the organization or the entity will exist, the restriction will also continue. These type of restrictions we call permanently restricted. So this is one permanently restricted, and for these type of restrictions usually the entity cannot use that fund, but a portion proceeds from these, most of the cases interest income from that amount can be used for any purpose. So now let's see which one is not true. So number A says that temporarily restricted net cash is increased by 90,000. It's true because this is one temporary restricted fund. So it's increased because of this gift 90,000. Number 2, permanently restricted net assets have increased 210. So the third one is for permanently restricted amount, but the amount is 120, but they say 210. So number B is not correct because the number does not match. How about the other two options? Number C, when the donated money is spent for salaries, unrestricted net asset will increase and decrease by the same amount. Yes, this is also true because when they will pay those salaries, that means they are fulfilling that condition, then those amount will be transferred from the temporarily restricted to unrestricted. So in that sense, unrestricted will increase, but at the same time they are paying salaries, so they have to record the salaries expense and they have to reduce their unrestricted amounts. So number C is actually true. Now, when the donated money is spent for salaries, temporarily restricted net asset will decrease. It is also true because I just mentioned if you fulfill that donor's conditions, then the temporarily restricted amount will be transferred from their temporarily restricted to unrestricted. So that means in that sense, temporarily restricted net asset will decrease. Now, let's see another example. Now see this number 6, we have some numbers here. Let's read the problem. It says that a private not-for-profit university charges its students tuition of $1 million. However, they are giving some grants, which is $220,000. In addition, the school receives a $100,000 grant restricted for faculty salaries. Of this amount, it spent $30,000 appropriately this year. So they have these temporarily restricted, which they actually received for faculty salaries, and then out of that 30,000 they actually spend it correctly. And then it says that on the statement of activity, the school reports these categories, 3 categories: revenues and support, net assets reclassified. Yes, they have to reclassify from they have to shift that amount that is properly spent from their temporarily restricted to unrestricted, and then expense. So now we're gonna see which one is not true. Number 1, unrestricted net assets should show an increase of 30,000 for net asset reclassified. Yes, this amount, this 30,000 will be transferred from temporarily restricted to unrestricted, so unrestricted net assets will increase. Number B, in the unrestricted net assets, the revenues and supports should total $1 million. Well, apparently it seems that the revenue is $1 million tuition revenue, but they are giving some grants, financial grants, and these financial grants, these $220,000, these should be actually reduced from their tuition revenue. So we actually saw this example. If you remember, if you go back and check page number 835, if there is any financial aid for any private school that they are giving to their students, that is actually shown as a direct reduction to their tuition revenues. So they should not show this total $1 million as their revenue and support. Now, so this is not true, number B, but we'll go over to two other items and let's see why these are true. Number C says unrestricted net assets should recognize expense 30,000. Yes, once they shift those $30,000 from temporarily restricted to unrestricted, they need to reduce this one too, because they are actually giving those 30,000 as faculty salaries. So they have to record that expense. Now number D, unrestricted net assets shows the 220,000 as a direct reduction to the tuition revenue balance. Yes, we just discussed that this financial aid, what they give to their students, that will be reduced directly from their tuition revenues. So number C and D both are true. Only number B is not true. So they asked for which one is not true. The answer is B. So now let's see some other problem. Problem number 10. Yeah, we see some big numbers here. So let's read the problem together and then we'll go over that. It says that Leigh Museum, they received 7 million donation, and those are in the form of common stocks, doesn't matter, but there are some conditions. Number one is that the museum is to sell that share 5 million out of these 7 million values, and they need to use those proceeds to create a public viewing building. This is one condition. Another restriction is that the rest $2 million that they must have to retain, and the dividends from those stocks will be used to support current operations. That means they received this 7 million donation, but there are some restrictions. Now we will classify those restrictions. So number one is a temporary restriction, because if they build this building, once they are done with the construction of that building, and they will spend all those amount to this building, then they will be able to transfer those amount from temporarily restricted to their unrestricted fund. On the other hand, these amount should be in the permanently restricted assets, because they cannot use those or sell those. They have to retain those, but what they can do, they can use the dividends to support their operations. Now the question is that here, as a consequence of his receipt of these shares, how much the Leigh Museum report as temporarily restricted net assets on its 2015's financial position. So of course we just discussed this 5 million will be temporarily restricted, and the answer is C. And here 2 million will be permanently restricted. So here temporarily restricted amount is number C. Let's see a couple more examples here. Here we see another example. It says that charity number 12, charity A and charity B are affiliated entities, and an accountant for charity B is paid $10,000 per month, which is equal to the fair value of the service rendered. And then charity A loses its accountant, and the accountant from charity B is sent to work with charity A, where charity A pays nothing for this service. So if you recall the item that we discussed earlier, and I believe it's on page number 829, which discussed about contributed service, if any not-for-profit entity receives this type of contributed service, free service, someone is giving kind of voluntary working hours, then they should recognize that if two conditions are fulfilled. Number one, if the service actually creates or enhances some non-financial assets. Remember, non-financial means physical assets. For example, a carpenter can work to build some furniture, and this could be his voluntary service, or some labor workers could work to build some buildings. So if this type of voluntary service an entity received, and those actually create some or enhance some non-financial means physical assets, then you have to recognize that. And another condition, that if those type of service require some specialized skill and knowledge, then they need to recognize that. That means without those, they would have to purchase those services. So here, I'd say this accountant, he actually needs some skills and knowledge, and if they wouldn't have that accountant free service from the other charity, then they have to hire someone else, and they may need to pay for them. So now we will check what statement is true here. So definitely they need to record it, because this accountant needs some skills. And how they will record it? No entry is made. No, they have to record it. Some entry must be made. An asset is debited for 20,000 and contributor support is credited for the same amount. Yes, they need to record the contributor support, but there should not be any asset related entries. Rather, they have to show this as an expense. This is kind of accountant salaries or service expense, but at the same time they have to record this contributed support. So number C is correct. An expense is debited for $20,000 and contributed support is credited for the same amount. Now last one, it says asset is debited and inter-equity account is credited. No, this is kind of vague, not specific and related. So I'd say number C. Number C should be the entry. They have to debit that expense and then they need to show this contributed support as credit. Now let's see the next one. It says a not-for-profit medical center performs service in the current year at a charge of 1 million, and officials expect bad debt 94,000, and another 200,000 is viewed as a charity service. Because this charity service is special. Sometimes they can give any healthcare or medical office can perform this type of charity service. That means they will not receive any revenues from those charity service. Now it says what should be the medical center's report as net patient service revenue. So apparently it seems that the total amount of service that they performed or provided is equivalent to $1 million. But when you have to think of this net patient revenue, you have to subtract all those either bad debt or write-offs. That means you are not able to collect it. And of course, this charity service is a part of it, because these type of charities, they usually provide to those individuals they have no ability to pay, and they actually don't collect those. So they should not record that charity part. That means this bad debt they will not be able to collect. So this 94,000 and this 200,000, that means these 294,000 should be deducted from these 1 million, which is apparently the gross revenue, and then you will find their net patient service revenue. That means 1 million minus 294,000. And the numbers are pretty straightforward. It should be 706,000. You can use your calculator and get ready during your exam. You may need to do very little this type of calculations. So the answer is number A, 706,000. Now we're gonna see some more examples, and those have some numbers in it so that I can explain the calculations part. So let's do number 18. It says AB is a private not-for-profit entity. It acquires YZ. Now these next couple of problems are talking about merger and acquisition, and what we actually discussed if you check page number 833. So here this is acquisition. Remember, when one entity acquires another entity and gain their control over that entity that they acquired, then it will be an acquisition. On the other hand, if two entities, they can be combined and they can form a new entity, third entity, new entity. In that case, we're gonna call it merger. So there is very subtle difference. Now this case is an acquisition because it says AB acquires YZ. So now the acquisition value is 1 million, and then YZ's net asset, it has a book value 600,000 but a fair value of 700,000. Now you see here they are actually paying much higher than their book value, even than their fair value. Now, another important information is given here. Officials for AB expect that YZ will be predominantly supported by contribution in the future. After the acquisition, what amount of goodwill will be reported? So if you think of any for-profit corporations, what you probably did in your advanced accounting course, and if one company acquire another company and you see that the total purchase price is higher than the fair value, then definitely you have to record goodwill. Well, not-for-profit entities also have that option to record goodwill, but here there is one condition. If they see that their future earnings will be kind of supported by contributions and donations, then they cannot record the goodwill, because this is one sort of uncertainty. If their future earnings will come from dues or fees, kind of certain source, then they can record goodwill. But here it says that they will be predominantly supported by contributions in the future, which is some sort of uncertain condition. So in that case, they cannot record any goodwill. So here the goodwill amount will be 0. So the answer is A. But if they would have some certain source of support, for example membership fees or dues, then they could record this 1 million minus the 700,000, 300,000 as a goodwill. Since it is mentioned that they are predominantly they will be supported by contribution, then they cannot record it as a goodwill. Rather, they will show this $300,000 amount, this excess amount, as a reduction in their unrestricted net assets. So if you go to page number 833, you will see the explanations there. Number 19, it says that BC and OP, they are both private not-for-profit entities, and they are combined to create M. Here, this is a case of merger. They are creating a new entity. No one is controlling over the other party or acquiring each other. So now they have this BC. It has a land book value. It is mentioned that book value is 300,000 and the fair value is 400,000. On the other hand, OP has a land. The other entity, book value is 500,000. Fair value is 550,000. Now, what should be the combined reported value for land? Remember, here we will not be using goodwill approach. Here we will not use the fair values because this is the case of merger, and we will use the carryover method. And for carryover method, we need to consider the book values, so pooling method. So they're gonna combine these two entities, assets and liabilities, and they will take the book values, not the fair values. So this is called carryover method, and not-for-profit entities will use it in case of merger. So now they have this land book value is 300,000 for BC, and OP's land value book value is 500,000. So if you add this, their total combined land value will be 800,000. So the answer is A. So the summary is that for this merger situation, you have to use the carryover method, and you have to add those assets liabilities as per the book values, not the fair value. So let's see, we have another example. Southwest is a private not-for-profit entity. It acquires Northeast, another not-for-profit entity. This is an acquisition, plain and simple. Acquisition value is $980,000. Now Northeast has two assets, the liabilities, equipment, book value 120, fair value 150,000, and another is building, book value 500,000, fair value 800,000. Now, Northeast expects to receive some support through donations and contributions. However, it is not expected to be predominantly supported by contributions, and investment income. So that means this Northeast, this entity has some certain some other certain income source. It could be their members like fees or dues, or it could be any other source. They are not predominantly supported by contributions, so their future income source or earnings is pretty much certain here. So in this type of situation, and if it's an acquisition case, you can record goodwill. Now, how can you calculate goodwill? This is very simple. It's kind of the very regular method that the for-profit corporations actually do. You have to see what is the acquisition price, which is 918. Now, what is the fair value of the acquired company? So here they have two Northeast, which they acquired. They have two assets. One is their equipment, fair value is 150,000, and another is their building, fair value is 800,000. So if you add these two, one is 150 and one is 800, that means 950,000. So total fair value is 950 and the acquisition value is 980. That means Southwest is giving extra $30,000 that would be recorded as a goodwill. So remember the condition: you can record goodwill in case of an acquisition only if you see that your acquired company has some certain source of future earnings. If it is supported mostly by contributions, then or in investment income, then you cannot record goodwill. Rather, you will show it as a reduction. The excess amount will be shown as a reduction in unrestricted net assets. Now, let's see another example here. Problem number 22. I see some numbers here. Mercy for America private not-for-profit healthcare facilities located in Durham, North Carolina. They charge a patient $8,600 for service, and it is billed to patient's third-party payer, whether the insurance company or Medicaid. Third-party payer submitted a check for $790,000, and they wrote a note that the reasonable amount is paid in full per contract. So sometimes some healthcare entities, most of the cases, you will see that they have some contractual agreement with the third party payers that they can collect a certain amount, and in that case, if an amount is unpaid, then or the third party is paying a lower amount than what is charged, then the healthcare entity must need to write off from those patient service revenues. So their patient service charge was $8,600, but the third party, they're gonna pay $7,900 lower amount, which is $700. They need to reduce it, and they actually show it as contractual adjustment. They have to debit it. So now, which one is true? The patient is responsible for paying the remaining $700. No, this is not the patient's part. So patient will not pay that. Number B, the healthcare facility will rebill. No, that's not the case. Because they have already a contract, and according to the contract, whatever the amount the third party needs to pay, they actually paid it. Number C, the healthcare facility recorded the $700 as a contractual adjustment that it will not collect. Yes, so they will record it as a contractual adjustments, debit it, and their patient revenue receivables will be reduced. Right, so number C is correct. Now, number D, the third-party payer retained the $700 and will convey it to the healthcare facility at the start or next fiscal year. No, it's kind of vague. It's not true. And I will say number C, answer number C is true. Now, let's see a couple more examples. Number 29. It says that a group of high school seniors performed volunteer service for patients at a nearby nursing home. This nursing home would not otherwise provide these services, such as wheeling patients in the park, reading to them. At the minimum wage rate, this service is equivalent to $21,320, but the actual estimated value is $27,400. In the nursing home statement of activities, what amount should be reported as public support? So, if any healthcare entity receives this type of voluntary services, then they have to check two conditions: whether those type of voluntary service enhance or increase any physical or non-financial assets such as building, furniture, equipment, land, or they have to check whether it requires some certain level of skills and knowledge or expertise to provide those type of service. Then they have to record it. Otherwise, they should not report it. So here it seems that it's this service that high school students actually perform. It is not enhancing or creating any physical or non-financial assets. On the other hand, this type of service, it says like willing patients or reading to them, it does not require any expertise like some sort of legal service or CPA or accountant related service. So it does not require any skills or knowledge. So for this type of case, they should not report it. So the answer will be D. Now let's see a couple more examples here. Number 31. George H. Root takes a leave of absence from his job to work full-time for voluntary health and welfare entity for 6 months. Is again voluntary service related question. And what did Ruth actually do? Ruth fills the position of a finance director. That sounds something like some sort of skills and expertise actually you need to do this type of job. No one can do it easily. Finance director, and for that position they usually pay $88,000, but Ruth didn't accept anything, and it says that he actually worked for 6 months. That means the service he provided or performed is equivalent to half of this $88,000, $44,000. And of course, it requires skills and expertise and knowledge. So they have to record it. The healthcare entity must need to record it, and they will record it as whatever the finance director salaries, expense, debit, and then they also show the contributed support as credit. So I think number A is correct. It's not an earned revenue, and it's not directly as an expense, and no entry should be made. So here it is number A. Now let's see a couple more. 32 is, well, we don't have any numbers still. You can go over that. A voluntary health and welfare entity produces a statement of functional expense. What is the purpose of this statement? So if you remember that they all those not-for-profit entities will actually produce 3 sets of financial statements, which are the statement of financial position, just like the balance sheet, statement of activities, just like an income statement, and they also do the statement of cash flow. But only for certain cases, especially for health and welfare entities, they need to prepare another statement, which is called statement of functional expenses, because this is really important, because they deal with billions of dollars and they have some complex relationship with third-party payers. So they actually need to show all of their expenses very carefully. So when they prepare that statement of functional expense, definitely that statement is to show all the details of all of their expenses, an analysis of all of their expenses. Now they can categorize all of their expenses into 2 parts. If you check page number 822 and 823, it says that they actually categorize all of their expenses into 2 parts. One is called program service related, another is called supporting service related. So program service related means that the types of the expense that actually they do that relates to the aim or the mission or the goal of the healthcare entity, and another is supporting services, some sort of their management related activities. Now we will see these two questions related to that statement or explanations. So number 32, it says that they have this statement of functional expenses. So what's the purpose of this? So separates current unrestricted and current restricted funds. No, here they don't do that. Number B, Yes, they actually here, when they prepared this statement of functional expense, they separate all of their expenses and they separate into two categories. One is program service related expense, another is their supporting service. I just mentioned program service is related to their mission of the entity. On the other hand, supporting service is some sort of managerial or some other administrative related expense. So number B is the correct. That's the purpose of this statement. Cash expense, non-cash, no, they don't separate cash versus non-cash, or they don't do either, like fixed versus variable. So number B is correct. Now how about number 33? It's kind of the same thing. It's classification of their program service and supporting service expense. So these are the items they have. This is a voluntary health and welfare entity. Remember this, their mission should be some cure of some disease or to provide healthcare service to people. So this is their mission. So all those mission related healthcare service related tasks should be under program service. On the other hand, administrative or any other management related expenses should be under supporting service. So research to cure diseases, of course, it's part of program service. Fundraising costs, it's kind of their administrative activities. They need to raise fund, and for that they may need to do campaign, print leaflets, but all those are administrative expense, not purely related with their patient care or health care. Work to help disabled, yes, this is also part of their healthcare service related, so I'd say it's also related to their mission, so it should be under program service expense. Administrative salary, it's pure supporting service expense. Now if you add those, research to cure disease, which is 60,000, and work to help disabled, which is 40,000, these should be their program service expense. 60 plus 40, 100,000 should be their program service expense, which is related to their main mission of that entity. On the other hand, fundraising and administrative cost, these 70,000 and 90,000, which is 160,000, those are their supporting service. So let's find the answer options. Here number A says program service is 100,000 and supporting service is 160, which we just calculated, right? Program service means this 60,000 plus this 40,000, which is related to their healthcare main mission, healthcare service, and the rest two are fundraising cost and administrative salary. Those are their administrative expense. So those should be under supporting service. So answer A is the correct one. So I just tried to explain some little calculation based problems, and you may have this type of small calculation related problem during your exam. But I'd request please read the chapter carefully. PowerPoint slides or my lecture video will give you a little basic idea, but for your good clear understanding you need to read the chapter, and this chapter and questions will be another good source for your practice.